Welcome to the channel. Today's date is January 5th, 2025. It happens to be my birthday. Happy birthday to me. What we're going to be talking about today is, do we think that the market crash is coming? Let's get straight into it. So now that 2024 is over, the stock market was up pretty big, something around 23% for the S&P 500. That's 2 years of back to back. In our time of investing, it's normally you don't have 3 years of these big back-to-back gains. So what we're going to do today is we're going to use this Wall Street Journal article to talk about, as a baseline, of do we think the stock market is overvalued. As you all know, I'm a big bear on the market. I wouldn't even say a bear. I would say that I just believe that the stock market is at real high dangerous levels. There's a lot of things going on out there that tells us that we're in bubble territory, to include high price evaluations, especially on the big stocks like Google, Meta, and Microsoft, Apple. The Microsoft and Apple has very high valuations, upward of 40. Even talking about Walmart is about a 50 PE, Costco as about a 60 PE. And these are really, really good companies that we know that's going to be around, and companies that we actually like to invest in, but we just think that the evaluations is just too high right now. Let's get into this article from the Wall Street Journal. Is this wildly overvalued stock market doomed? Yes, maybe not, but maybe not. As you can tell, they do think that the stock market is overvalued, as you can tell from the title of this article. Let's see, history shows no link between nosebleed valuations like today and next year's returns. Expensive stocks can always get pricier. And that's a true statement. And I can tell you right now, I don't know when the stock market is going to come down. I just know that, I like to buy stocks when stocks are undervalued, when stocks are cheap. That's when I think my opportunity to win is a little bit better, because you never know. Just like in a bear markets can keep going down. I would never try to think that I can find a bottom in the stock market, but when I can tell and I know when stocks are cheap, and I just believe that that's the best time to invest. So that has to mean on the opposite side, if stocks are overvalued, I think my chances of gains are less. And that's basically all that I'm saying here. And I had a good, from 2002, we had the lows of 2022, up until 2024, when I decided, at the end of 2024, I decided to get out of the stock market because it was just too dangerous for me. I'm not saying that a bear market is coming, is right around the corner. Some people out there predicting that it may happen in 2025. I'm just saying I just don't believe it. And I actually have majority of my money in T-bills and a couple good dividend paying stocks, which might also go down with the stock market. But right now they're paying good dividends, and they're pretty much long-term holds for me. And as you can see on this article, it talks about the two of the big brokerage houses, Goldman Sachs and Bank of America, has a over the next decade, they have a bad prediction for the stock markets. Goldman Sachs believing that it's only going to gain 3% year over year for the next 10 years. Bank of America is worse, saying that it's going to gain 0 to 1%. And I believe that they're saying that, and I actually somewhat agree with their prediction. But as we know, stocks just not going to stay flat. Stocks just not going to gain 3%. I think what they're saying here is that we're going to have a nice major stock correction, and sometimes stock corrections take a year and a half, 2 years before they reach a bottom. And so even if the stock market started today, the downturn started today, and let's say it lasted 2 years, they're probably saying that it'll take the next 8 years to get back to where we was at and up their 3%. So they're not saying, so 3% over time is not 30%, it's a little higher than 30%. Let's just say, for the math, it's 35% over the next 3 years. So if we get a stock market crash, let's say we get a 40% downturn over the next 2 years, they're saying that it'd take, to get back to where we're at now and to get that 35% gain, then that's probably what they're predicting. They're not predicting that it's just going to be flat. So when you think about it, if you can take advantage of that 40% downturn, and let's to make the math really simple and really easy, let's say we get a 50% downturn, which are really, really excite me. Some of these good companies will really be selling at good prices. And a lot of times, investors like right now, and I got to admit, it's difficult right now to be out of the market when the market may still continuously go up. And so you have to make sure that you practice patience and discipline to make sure that you don't jump back into the stock market, which in market psychology, that's what a lot of people do. They're afraid they're going to miss out on something, so they just go ahead and invest anyway. We're not going to make that mistake, and that's the important reason for T-bills. T-bills allow you to be very, very liquid, being short term. I like to do 3 months. I don't even do 6 months. I like to do 3 months T-bills so that they, if the downturn do come, so that they expire, I gain. They're paying about 4.25% now, and I'm actually happy with that. And I actually believe that over the next couple years that my T-bill investment is going to outperform the market. And I know a lot of people think that's real conservative. A lot of people think that's not going to work, that you have to be in the market, but you really don't have to be in the market. And Warren Buffett is telling us. And, last time I believe he reported earnings, he had sold off stock. He was sitting on a stockpile of $325 billion. And I believe it's going to keep climbing. Apple hit all-time highs just not too long ago. That's one of his stocks that he's selling. And he's also been selling Bank of America, which has been doing well. So I wouldn't be surprised to see if he completely liquidated or close to liquidating his position. And that's what he does. He put most of his money in T-bills. And who can question the greatest investor that ever lived? I mean, I'm not going to question him. I'm not going to completely follow him, but I'm not going to question him. And as this article says, the S&P and NASDAQ are at record highs. That was the time of this article. We know that they came down a little bit. A little bit before this article is when President Trump got reelected and stocks really popped. The U.S. stocks U.S. stocks are really expensive. Six of the Magnificent Seven, Apple, Amazon, Meta platforms, Microsoft, Nvidia, and Tesla, are expensive. I will argue that a Meta is not as expensive, and as it says on here, Apple lags behind. But the stock, after this article, the stock has been up a lot. And it's just in this article, it talks about how they're going to invest probably around $500 billion this year on AI, which they believe is a lot of things driving the market. I believe in AI. I believe AI is going to be a big part of the future. I know Meta right now is doing a really good job at monetizing their AI because they're helping display their ads. A lot of these companies are making themselves more efficient because of AI, which is also going to help returns. As we can look here on this chart, this is the cyclically adjusted price to earnings ratio, and you can see the 1929 bubble. We're way higher than that. And the other one is the 2000 bubble, the internet crave. We're not at that point yet, but we're really expensive, and we're going to see what happens with these. The overall market. Like I said, we don't know when it's going to come down, and some of these big tech stocks, I would love to get them at a better price, but they're just right now some of them are just too expensive for me. And we're not going to go down just kind of glancing over the article. They're talking about earnings. They actually believe that earnings are going to grow at about 14% next year. I don't know if I believe that, even though these big companies, they make so much money, they can make up for a lot of things that are doing bad. I'm really worried about the auto industry. I'm really worried about Europe. I'm really worried about Japan. They're having really difficult times, in their stock markets right now. And the companies are having a really hard time. As you know, the dollar stores, a lot of things on the low end are doing really bad. Because right now in America, it's almost getting to the point of being unlivable. A lot of people can't afford homes this year. Can't afford anywhere to live, having a hard time putting food on the table. And as you know, we hit a record of homelessness. And this ain't just, people that's, might not have all their psychology there, may need a little bit of help with drug problems, something like that. These are actually working people that are now starting to become homeless, which is really hurting the bottom end. But what's keeping this going is that people on the high end are still spending, And as you know, prices are a lot higher now. And so it makes it look like the GDP and stuff is going up. But I think that it's it's just what they're buying, and at the higher prices they're buying is making up, for the low end. And this chart right here is just kind of showing the 2000s, and it's just using the telecom sector. It wasn't so much in 2000, those years, it wasn't so much just internet stocks that was blowing. It was like real companies, the infrastructure behind it, like Cisco Systems, Lucent, which is pretty much not around anymore. Those telecom stocks was really rising. WorldCom, that ended up going bankruptcy. And a lot of those times when you're dealing in big stock market gains like that, you have fraud, and that's pretty much what WorldCom was at the time. There was something else that I wanted to hit before I end this video. As you can see, what this chart is showing, that the S&P is at about a 22.5 forward earnings, and that's the earnings that they're predicting. And if we was have the recession, then the earnings might even come down. But as you can see, the MSCI, which is basically the world x the US, you can see the PE is below 15, which is about the normal average, for the S&P 500. And American stocks are doing so much better than the rest of the world. And I just don't know, we are doing better, but I don't know if that type of increase or dividend yield that they're giving, not dividend yield, but price to earning ratio that they're giving the United States of America is actually justified. But we'll see what happens in the future. As we know, we're going to see when Donald Trump takes office. We know he has pro business. He's going to be a pro business administration. So we'll see if what he'll be able to do to help out business. But bottom line is, I don't know if we're going to go into a recession or if we're going to go into a stock market downturn. I do believe with 100% that we're going to have one in the near future. I mean, I just can't time the market, and right now the market is just basically too high, too dangerous. I made quite a bit of money in the stock market, and what I'm not going to do is that I'm not going to give it back to them, and I'm going to wait until price evaluations come down and I can buy some really, really good companies at really good prices. So I do want to talk about my book that I wrote with a friend, The Culmination, a risk-free method of consistently outperforming the S&P. And basically, we just talk about in that book, you can buy that book from Amazon. And we just talk about, if you're not Ben Graham put it as an aggressive investor or a passive investor. And if you're a passive investor, this mainly talks about when you can start purchasing the SPY. And I can tell you in that book, we would not be recommending that you start purchasing the SPY or the QQQ at that time. But if you're a passive investor, it's a really good book to pick up that will allow you to make gains without a lot of heartache. And so I hope you go and look that up, pick it up, give it a good read. If you have any comments, please comment in the bottom. If you don't agree with what I'm saying here, please comment. I would love to comment back. If you like this video, please subscribe, please like, please forward. Good luck investing in 2025.